Welcome
What
back.
up? What up?
Viral, how we doing? Robs, what's up? Yeah, dude, if Norvin joins, I'm out too, Viral. I'm right there with you.
Oh, Norvin's joining.
No, dude,
Oh, fuck.
if and when Norvin joins, we'll get that mute on him quick, don't you worry.
Spotify and Shopify are the same, bro. Just kidding.
Oh my God.
Remember when
Dude,
he said that
dude,
shit?
some of the classics from him are so good. Dude, when SMCI hadn't filed their 10K, their like, their tax paperwork and their like income paperwork, I was like, dude, they don't have a proper 10K. And he's like, 10K ain't shit to SMCI, they're worth billions.
He thought you were talking dollars. Fucking guy.
Dude, I fucking love that guy. It's like, yeah, you're right, Marvin. If it was over $10,000, I don't think they'd mind. Dude, I love him. He just had a gem in the free chat that I saw. I pasted it. If I told you right now in any portfolio that you have, I pick you the best of the best companies, you will perform the S&P 500 not by a percentage, but by milestones. Dude, I love this guy. Norman Buffett.
Dude,
Uh,
GameStop got clobbered, huh? I happened to just see that today.
yeah, they did another share offering. I just saw the news on it.
It sounds like they're doing the somewhat same strategy. They're trying to kind of do the same strategy like fucking Michael Saylor.
Yeah,
But it's weird because
a
Michael
Ponzi
Saylor.
scheme. You're right. It does sort of seem like that's what they're doing.
But what's weird is like when MicroStrategies was doing it, it was like Bitcoin price was helping the stock, and it seems like with GameStop, the opposite's happening.
Well, yeah, because they're new to it, and it's basically a company being like, okay, maybe we aren't going to do the video game thing, and we actually want to be a Bitcoin holding company. They're like, when you start trying to change face, it's bad. It can't
Yeah.
be bad. It can go rough for you. I mean, it's even like Facebook. I'm not like obviously other things are going on in 2022, but like. Dude, you're a gigantic company and you change your name and you change your like persona for no reason, and people do not like that. And we saw a very negative reaction with the name switch to Meta.
Well, my Starbucks shares are paying. I picked up a small position in anticipation of it going back to the 200 daily, and I'm kind of waiting to see if it breaks out above and
I
retests
like
that,
that
and
one.
then I might pick up some more.
Yeah, I like that one. Ninja asked me about that recently. Like, I mean, it might have even been last week or something. And I thought I set an alarm for this 88.4 break. I apparently did not. Oh, Viral, you're on that pep, dude. Dude, people have been sending me flow and stuff, and like this, like I love this. Like, don't get me wrong, is the chart hideous? Is it down, like I mean, is it down like bad? Yes, I'm not denying any of that. This setup right down here is like if you aren't getting long Pepsi in this like 129 to 130 range, I don't like it's free money. I don't know what you're doing, I'm not in there, unfortunately. But dude, I like that. And then somebody, I don't have flow. Might have been 1K, I don't remember. Somebody sent me a pile of some late date or some, end of year, I think some like December calls out of the monies too, with size. So feels like somebody's finally maybe trying to look for that move to the upside, got that dividend out of the way. Oftentimes things will sell a little bit into the divvy, a little bit after the divvy, and then people will decide if they want to get back in there. Nice one, dude. I bet that one's gonna run. You run those things in the money and you're gonna be stoked.
Hey, River,
It's happening.
slightly off topic, well, on topic of stocks, but seems like things are heating up in the Middle East. There's some tweets going out. Do you think that'll affect us? Because we're not really directly involved, but we kind of are. Seen a bunch of stuff right now on Twitter, some explosions or something.
Ye- Dude, it's so hard to say. Like if I have to have my like if I use my I mean I'd say where it's affecting the futures.
Dude, America's involved in everything, even if you think we're not.
Yeah, especially if Israel's involved. But my like if I pretend the fact I don't have personal feelings or anything on this. Middle East confrontation is oftentimes not a big market mover for us. I don't want to say any of this with that, like, and I'm not trying to sound horrible. It's happened a lot. And so the market has learned how to handle it. We've all seen rallies on war news, things like that, you know. Obviously we're dumping 40 points right here, no denying that. But as far as long-term big effect on the market, not necessarily. If we get wrapped up in a more direct way, of course. But we could be seeing the reaction right here and it could end, but who knows? This is always fun when this kind of stuff's going on during classes. Let's see, let me make another post, but I don't know, you know, I mean, you never know what the market's going to do. Got all kinds of random things going on. You seem to be knifing her, huh?
Yeah, I think the Russian invasion, I think we gapped hard for what, a day and a half or a day, and they got bought up pretty quick though.
Yeah, and like I mean, we rally a lot of the times on the backs of these things. So I wouldn't get too hung up in a couple candles right now, but I mean, but I do also have to say, just news is always important. I didn't want to like say anything besides that. News is always important, and news will always have some effect on the market, whether it's good or bad or how long it lasts is of course the hard thing to know. But news will beat the best technical analysis on the planet, no matter who you are. You can of course start to use that technical analysis once the news has come out, but okay, let me get another post posted here. Welcome everybody, how we doing?
What's up, Robert?
How's it going?
Good, brother. How are you?
Oh, doing good.
That's what's up. How's the trading going? Trade anything today?
Apple was my good one today. I couldn't put we had a couple nice SPY scalps, 20 or 30% or something, but nothing too exciting. But hit Apple. I did good on Apple today.
You caught the bottom, or was it?
We caught this like initial bounce early
Mhm.
off of that. This was off of B band. Then I hit it again down here. Then I shorted somewhere up here, 198.80, 199 zone. And that was actually Kappa. I don't know if he's in here. He's around a lot, but he said he's like, he asked me where do I short Apple, and he had brought it up earlier in the day, and I told him 199, so I figured I'd take that one, and then dove into some apples again down here, and caught a lot of this run. So it was a good day for me.
Nice.
But then
Nice.
SPY was boring for me.
Yeah, SPY I only called in the morning because Flips called it out.
Yeah.
Caught that, and then I shorted SPY, and then it was just playing with me, so I just broke even. And
Yeah.
those contracts flew to $20 each.
Wow.
Yeah.
Yeah, and
It happens.
nice little move on SPY, and I traded just early, and then I came back
Yeah,
for this.
F that.
So I traded some of this, I was looking for this. I was looking for this big green candle about 20 minutes before it came too, unfortunately.
Yeah.
Oh yeah.
I was in a Q call earlier, got stopped out of break even.
Yeah. Honestly, it's good to be break even,
But then
Sometimes.
it fucking flushed. So I was happy.
Yeah.
Oh yeah, dude.
Same with mine.
About that before.
Same with mine, brother. It went
That was
up.
even mine. I caught this bounce. I caught this bounce on some out of the monies, and then I was being super greedy on my fill. And then I didn't take the 50% fill, and ultimately took the $1 profit per contract instead, and on the pullback. It's just the way it goes sometimes.
After, man. You agree. If you're green, you agree, brother. That's what matters.
Oh yeah, viral next. You've been
I was up
scalping-
20.
Viral, you've been scalping Pepsi to finance those longer ones. I like that. That's my favorite move on the planet.
Nice.
Trade shorter dated against your longer dated and make money, so the long dateds are free. It's about as good as it can get. Yeah, Shield, always a good one. I just say Shield. Always a good one to be in. I definitely don't I don't trade the war names. That's just me personally. I mean, I'll trade Boeing, which is technically speaking a war name, but I don't touch those like Raytheons and stuff like that personally. Lockheed Martins.
I missed a nice Bank of America trade today.
I was bummed. I wanted to swing a couple of XLF shorts. So we were right at that 51, and I wanted to swing those 51s, and I didn't do it. didn't do it. I did hit this though. Got the nice move up on XLF the day before. So
River, do you swing anything?
all the
Uh,
time, every day, every
this
single
month?
yeah,
You have anything
every day. I
every
swing,
day?
yeah, I swing something every day. Yeah. Some of them
What's-
total
okay.
autos, some of them are like, long-term stuff. Like this was a sick one. We hit some AES. So we hit these back here down by this trend off this 958 zone. So I was just swinging those for a couple weeks and I finally cashed my last one yesterday. But
Nice.
so nice swing, but yeah, I mean I swing something every day. Like I said, sometimes lotto, sometimes it is just like that AES, a longer dated thing that I'm looking for a bigger move. And this is, I mean, on something like this thing, this is just an absolutely massive move. I mean, we let's see, we did 22.7% upside move on the stock. So yeah. But so yeah, I swing all the time, and we talk about them in voice chat and stuff normally. Because swings are great and stuff, but people have a way of like panicking or getting worried or stressing you out and messaging you like 800 times. And so I typically talk about the swings in the voice chat, and then what I tell anybody for anything that I'm swinging, if I have the plan of swinging it, we enter it and I tell them, hey, I'm going to swing some of these, but if I can, 99% of the time, if I have the ability to, I'm going to alert a trim and I'm going to tell people, trim some of these. If you don't want the risk of swinging, which oftentimes there's no point in taking the risk and swinging, there's, sure, you can swing your contracts for a week or whatever and make your 50, 60, 70%, but you might deal with a nice drawdown through all of that. So you guys know me, I oftentimes push for, take advantage of intraday volatility on some of these names. And then kind of like me and Viro were talking, if you do want to get into some swings, don't swing next week contracts, swing some real contracts with some time where you can let them breathe and things like that, and you'll find a lot more peace in it. But, people in OT, the type of swings they want, they want it Monday, they want to be swinging Friday contracts and they want to see that ripper overnight, and so, like even today, like I felt so bad for Nando, this net trade of his, I just heard him talking about it. I always get scared buying at double tops like this, but to me, it was perfectly reasonable. I mean, you buy the longs down here on some of these wicks, you run your stops under those previous highs back from February. To me, this was a pretty dang good looking trade. Like I said, I oftentimes won't get long at highs like this. But last night they come out of nowhere and they dump a share offering on him. And so that poor guy, I imagine his DMs were like mayhem after this. And there's nothing, there's nothing you can do about that. Thankfully, epic saving.
Yep.
Ended up green. I think that's like good for him, like you guys know me. I always say, like, if you have a trade that was down 70% and it comes back to green and you make money, bad trading. Happy you made money, but don't do that again. But this is the type of shit, dude, he had no control. And so that's why it's pretty risky. I won't say risky, but in OT, dude, I'm sure people were panicking and bugging him. And like, there's nothing he can do. And like he said, he even mentioned it. Is it maybe an overreaction? Could be. I mean, it was, a good chunk. They're doing a share offering for a good chunk of their value after I read about it. But you're going to see buying on the back of that more often than not. So he was right to say, I'm going to let it work in the morning. That's all you can do. Of course, sometimes with swings though, those things just get away from you. And there's no coming back. I can actually show you one that I took. Let's see. I shorted. Oh, I think I shorted this double top on T. I think this one was it. I think I shorted this double top on T right here. Not bearish or anything, looking for a pullback to buy. Never gave me a chance. Like this thing never looked back. And so I got blown out. Sometimes that's going to happen on swings. And so, I alert him in VC, but oftentimes I'm going to tell people trim those things, but I swing something every day just because
I prefer swinging shares versus contracts myself, but
yeah, yeah, and
But
shares are, but people they don't, people hate math, they don't understand that like, option contracts represent shares. You can actually make some pretty dang nice money swinging shares, especially if you know what you're doing. And
that's how I built my Roth, bro.
yeah, and whether you're trading them or scalping them, of course, you generally speak like to make bigger gains, you obviously need more capital if you're going to be trading shares, you know, but it can be a very safe, very fun way to do it. That's
Unlike
oftentimes,
time.
you know, I'm not going to recommend it, but it's almost always how I trade any ERs, you know. You got those expensive name ERs, you know, like you got Meta ER or something coming, and slap a few shares on, or I'm not saying Meta ER is coming, I don't know when it is, but I'm just thinking of an expensive name. Buy a couple shares. Maybe you get that 10% bounce, or maybe you get that 5% drop. And you know, if you got a few shares on a $700 stock and you get a big old move, you might make a couple $100 with a lot of safety, you know. And so and they aren't going to zero. So that's how I'll do it. Or even, you know, TKQQs, SQQQ, whatever it is, you know. Okay, but with that, let's get rolling. Welcome everybody. Sorry, I was just yapping there.
I love
Dirty
when you
River.
talk, bro. I love hearing you talk.
Dirty River, happy to have you guys here. Tonight, a little bit different of a lecture. It's something that I like to, you know, I do this one. I always do it in my beginner series. I went over it heavy in Mastermind. Long time frame analysis. I preach it all the time. I preach use daily levels, chart on the daily, find your trend lines on the daily, get all of your information from the daily you can, SMAs, EMAs, whatever you like to use. You know, I love the SMAs, especially when we're trading around. Of course, these are EMAs pulled up right now. I love SMAs on the daily time frame, especially when we're trading around them. 1K, not sure if he's still in here. He loves EMAs on the daily time frame, and does really well with them. It's not something that I use, but the big picture is it's daily time frame information. It doesn't matter who you are. I don't care what you believe. Things that happen on the daily are much, much stronger and much, much more important than on the 5 minute. We're going to talk a little bit about that to start it off, just because I want to, you know, instill some ideas in people. You know, we hear just a lot of, you know, just a lot of nonsense in the market and just weird ideas. And, you know, I had guys in voice chat the other morning and they were like, well, this stock went down yesterday morning and then it went up and it's going down this morning. So I'm going to buy calls because I think it'll go up. That is not trading. That's not, you know, you might think you're analyzing the market, but just because someone went down and then up one day does not mean it is going to go down and go up the next day. Had they told me something along the lines of, you know, hey, I'm trying to buy this double bottom off of yesterday's low, blah, 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 things like that, then I would be all right with it. But when you're just saying went down, then went up, so must go down and then go up again, that's not really trading. Crash, I just saw your snap. You guys want to see an alert I got just real quick from a member? So I got a DM from a member. Snapchat's up here. And he says, so hear me out, July 10 calls for Snap. So I hammered him. How do you guys think I'm doing on those things right now? Okay, so back to trading. So we always, yeah, oh God, is Ian not buying in here? I love that guy. That's one of the best. That is one of the best like voice chat phrases we've got in quite a long time. Are you Ian or are you buying? So back to the daily time frame. It is the most important thing ever. Not only are you going to find your strongest levels, like I said, trend lines, you know, support resistances, EMAs, SMAs, whatever you use, fibs, B bands, whatever it might be. Any of them on the daily matter more than your 4 hour, then your 2 hour, then your 1 hour, then your 30 minute. They are all more important levels. We can, of course, use those intraday, you know, points of consolidation, support, resistance with our trading, but they aren't things that you necessarily want to keep on your charts. And so that is why I push the daily levels so hard, because they work and they work time and time and time again. And so what do I mean by that? And so I know not everybody's necessarily traded for, you know, the last 5 years or whatever it was. But great example, 2022. So we sell down in 2022 and then we start buying up and we start buying up and we buy through, you know, all of 2023, all of 2024. And the levels here were the levels from here, from the sell-off in 2022 or the buy up in 2021. You know, that's where the levels we traded on the way up came from. So you might have heard, you know, me or, you know, all the, or 1K or whoever it is, Tilio, anybody, if you want to know what the chart is going to do to the right, you look to the left, and the daily time frame is where you look to the left. I really, you know, I don't have anything against the 4 hour. I don't have anything against the 2 hour charts. I know a lot of people use those. They're good and they have information, but if you aren't looking at enough time on them, you're always going to struggle. And so we can look at our daily time frame on SPY, and we can look back, maybe we look over here and we start to say, as I have kind of been saying the last couple of days, we're running up into this 604, 605 zone. You want to quit being long. Do I think that the market is, eventually, potentially sooner than later, going to go higher? Absolutely. But this is still a terrible place to really be hammering longs. And we can see that on the daily time frame. We look back and we see that market hasn't had a lot of success when it's been up here before, for, all of that December and the little bit of, February that we had before March mayhem started, we've seen the market hasn't had a lot of success. So for me, this is where you really want to be easing off on your big names, and don't get me wrong, we got some tech still demolished, Apple, some other names. But we want to start to ease off on those big S&P names as we push into these highs, just because when you're getting long up here, you're getting long at resistance. So we can very easily see that on the daily time frame. Well, if I, maybe I'm going to zoom in and I'm going to look at, and we'll go 15 days. And I'm going to look at, we'll just go 2 hour chart because it's what I'm on. And we look at the 15-day 2 hour chart. Maybe we don't have our daily trend. We just see a strong uptrend right here, where we say we want to be dip buyers up here. And people will say, oh yeah, I'm looking at the long time frames, and sure, maybe you're looking at that 2 hour. Maybe you're even looking at the 4 hour and you're looking at the 20-day one. Well, you're still just seeing this strong uptrend, but you have no idea. I mean, you have some support at these highs right here, but you have no idea where the market actually sits. And that's where the daily time frame comes into play. We can look at this and very, very easily say, okay, I'm not saying we're double topping. I'm not saying we're, selling down or anything like that, but I know that the higher we get above 605, the less and less bullish I get. As the closer we get to all-time highs, the less I am a dip buyer. When we're able to get over those, sustain some buying over those highs, I'll start to look, into more dip buying for a continued move to the upside. But this all comes from the daily time frame. And this is what I do on every single chart. It doesn't matter what stock I'm looking at. None of that matters to me. I treat them all the same. I know a lot of people, they try to watch, many different stocks, all of the ETFs, this and that and the other. I personally watch 6 charts throughout the day. And then extra focus on whatever I'm trading, so if I have another screen and it has my 4 big name techs on it. I have another screen that's got XLF, XLE, QQQ, and then my big screen is whatever I'm trading. The main one, the one I stream in voice chat, the one you're looking at right here. This is where I put the stock that I'm actually trading so I can get the best view of what's going on. And I treat them all the same. I do the same thing every single day. I analyze the stocks the exact same way every single day. And we're going to get into the charting of it here in just a second, but I want to really, people always want to watch a lot of things, or they want to FOMO and they want to say, what was the weird thing I saw? They see this absolute explosion on Planet Labs, and then they want to be short Planet Labs, and they, like me, have no idea what Planet Labs is or why it's ripping or why it's dumping or what's going on. They see it and they feel that bit of FOMO. So you don't want to be that person. You don't want to be, the random person that, for another great example, looks at GME and says, why didn't I short GME on it? Why didn't I short GME? Well, because you didn't know they were about to do a big old share offering. You don't want to dwell on these things. You want to just look at your daily timeframes and pick a small basket of stocks that you watch. Like I said, I watch all day. I watch Apple, Amazon, Microsoft, NVIDIA, XLF, XLE, QQQ, SPY. Those are what I watch all day, every single day. Those are what you know, I'll say 70% of my trades are on those names. You guys all know I love to trade AT&T, Coca-Cola, you know, some of those random Bank of Americas, XLFs. I'd love to trade those things as well. But for the most part, those 7 things that I watch are what I trade. And it helps me not FOMO. Like, I don't care that GME dumped. I don't care that Planet Labs flew to the moon. None of that matters to me because I don't watch them and they don't affect my trading. You know, we see it all the time where people go chasing the hype name. A big one, this one, CoreWeave. I mean, everybody's talking about it now. I still personally don't really know what they do. By the time people were chasing it, it was starting to have these pullbacks. You know, I saw people swinging, it was trading at 100 and I saw people swinging 180 calls. And did they end up making money? Absolutely. But that's just insanity, you know, like don't get caught up in this. Get caught up in, you know, real consistent trading every single day. Did CoreWeave explode? Absolutely. Nvidia takes a big old stake in you and your company is happy. Your stock is going to go up. So I understand wanting to be long on the name, and you should be long on the name if you're into trading that sector, but it doesn't mean go chasing the momentum. And don't be sad when somebody posts, you know, big gains on a stock that you don't trade. And so just focus on the things you like, you know, like I said, like I like to trade the things that I trade. 1K likes to trade the things he likes to trade. Nando likes to trade the things that he likes to trade. Flips, all of us, you'll see, you know, we trade the same things over and over and over again because we like them and we understand how they trade. And so, and I know that at least for, you know, me and 1K for sure, we spend a lot of time on the daily time frame. I know that Nando spends some time on longer time frames. I'm not necessarily going to say daily, but I know that he spends a ton of time on those longer time frames because it's where we find our trades. Then we go to the 5-minute prime one, Coca-Cola. I'll just pull it up right now. Me and 1K have been joking for 2 months now. 72.25 to 72.30 on Coca-Cola. Short it. It's free money. And for all intents and purposes, it has been. You know, we're finally are starting to see some buy-in, some weird flow, things like that. You know, so maybe 12th time's not the charm, but look at the daily time frame. And if you look at this, you say, okay, I know where I don't want to be long for sure. It's very obvious where I
Hey,
don't want
River.
to be long. Maybe down here is where I do want to be long. So always look at the daily time frames. They tell you what's actually going on. You know, you can even go to your 5-minute charts. Maybe you get blown out or maybe you get saved by the end of the day like I did, you know, and maybe you buy these dips down here 70.9 up to 71 because it's working over and over. So you do all of this on the daily time frames and all of your stress goes away. As I said in my post tonight, the most common questions I get are, what do you think of this chart? Well, really, it's calls or puts. That's the most common question I get without a doubt. But what do you think of this chart, or do you have levels on this chart? I'm sure many of you in this class have sent me those questions. And so tonight, I'm going to show you, and we're going to go, you know, I'm not trying to make this a support and resistance lecture or anything like that, but I'm going to show you when, with a little bit of practice, how quickly you can get all of the charts you need charted. And then, and this is my favorite part about the daily time, using the daily time frame. I love charts. If you guys didn't know, I love sitting and looking at charts. I love trading charts. I love doing the charting. I don't love having to wake up and put new levels on my chart every day. That's why I don't spend a ton of time on the hourly charts or the 2 hours or the 4 hours. I just want to know what's happening big picture. I figure if big money doesn't, you know, big money cares about where do we open, where do we close, and nothing in between. So if that's how they feel, that's how I have to feel, you know? So I get my information from all of this. And so I'm going to show you with a little practice how quickly you can get all of these charted. Then you can sit down at your computer, you can log in, your charts pop up, and you're trading. You know, I'll show you guys kind of the steps that I take in the morning. And it's easy and it's simple and everybody can do it. Like I said, I am going to go quick tonight, but if you have any questions, always, you know, ask them. But let's see, do we have any questions in here? Speaking of which, yeah, I am not buying. That was a good one, dude. He's so good.
Real quick, I found that I like to trade the 15-minute and the hourly time frames around the daily levels.
Yeah, and we're
You
gonna,
know,
yeah, and that's what we're gonna talk about here, you know, is finding what you want. Yeah, Raphael 1K knows. I won't buy Calcer. Maybe it works, you know. I say the same, I say those kinds of things all the time.
also real quick, going back to what you were talking about how watching like a small basket of stocks, I found out early on that if you're watching too many fucking names, you end up
Oh.
just missing trades.
Oh, you just miss trades and then you just end up getting clobbered because, you know, I'm not going to say everything's repeatable on a chart, but you learn how a chart moves and you can like, I mean,
Mhm.
this is dumb and I'm never ever recommending you like you tell somebody to like trade by like a gut feeling, but you can kind of start to look at a chart and say, I've seen this before. Like you guys ain't gonna trick me. I ain't buying this. I'm shorting this or whatever it is, you know? And when you learn the stocks, I mean, one of the best examples ever was Flips on AMD. He traded AMD every single day, no matter what. And he knew the stock. He knew what the candles did. He knew where the buyers wanted to show up. He was in tune with AMD. I mean, like those things were him and AMD were virtually making the private phone calls at night. It felt like he knew how that thing moved. Anybody else can get like that with a stock and really, really learn it. And so, Byron, what do I prefer more? Consolidation or trend? Consolidation by a mile. Especially big. I like daily consolidation. Um, I like daily consolidation when it's kind of big. This KO is actually a really prime example. When you give me extremely obvious buy spots, extremely obvious sell spots, maybe you aren't necessarily day trading. Maybe you are swinging, you know, you're looking for the bounce from 70.9 to 72.2. This is what I like. Very predictable, very safe. You have much tighter stops. There's no emotion to it. Do I love catching a nice big old trend? Absolutely. Who doesn't? But statistically speaking, markets spend in 65% of its life in some form of range. So I just love ranges. They're easy and they're easy, you know. Like today, we'll just talk about today. Had I really been trading today, because like I said, I missed most of the afternoon, you have a very defined high, you have a very defined low. You're short up here every single time. You're long down here every single time. You know, and the advantage to this, are you going to get 100%ers? Well, end to end today, maybe. But no, but you can hammer 20% trades with very tight stop losses. That's my biggest thing. You know, you might be able to get your 20-25% trades. And if you do get stopped out, you might only have to see 10% red. So that's my favorite part about trading ranges. Then the second best part about trading ranges, and well, Coca-Cola hasn't done it yet, but say you're trading this Coca-Cola range that we were discussing, and you're buying down here. This provides you the best possible entry if the breakout comes. So if you're trading this range and you're longing down here, well, a lot of people will want to be buying up here. They'll say, oh, the trend's breaking, blah, blah, blah. They ignore the range. They want to be buying up here, looking, you know, maybe a pullback off up here, but looking for the breakout. Well, statistically, most breakouts fail. So if you trade the range, by the time people are trying to get into the longs for the breakout, you're already up big. So trading the range, buying the dips at the low of the range, no matter how you add it up, provides the best possible entry for a breakout if it does come, or it gives you the very nice range to trade where, you know, hey, you push up to it, you get your nice extension out, you probably take most of your profit there. Then when you come in and you see you can't sustain that, and you come into today and you short the free money short zone on Coca-Cola, write it right back down to the buy zone and take her straight back up, you know? Does the person who holds and swings make money? Yes. The person who shorts this, longs this, made more money than that person will make on their swing for the breakout that might take a couple weeks to come, you know? So for me, I love ranges. And I love cut and dry. Like if I'm long down here, obviously it's Coca-Cola, so you have to give it a little, you aren't going to stop on a 5-minute candle, but you get long down here, 30-minute candle close, hourly candle close below this level, and you take your stop out, you know? And it's a 5, 6, 7 cent move against you. You're only going to lose like $8 on the contract. So that's why I like it. Jacob, sorry, that was a bunch of yapping. We're gonna get into real stuff here in 1 second. When I do Vibs, so Fibs on a daily time frame are really the only place that I like Fibs, and I can't say that, but like really they're the only place that I like Fibs if we're being technical. And generally speaking, I'm only going to use them for big dramatic moves, like this is where I might, maybe I'm going to draw a fib like this. And look for bounces, retraces, whatever it is. Maybe we have a big old consolidation like this, and maybe I want to run an extension because this is kind of that previous breakout point. So I kind of want to go to the highs. Maybe I run the extension. When you run through them all, then they're gone.
I
That's
saw a fib level that actually worked as soon as you like drew that first one.
Oh
It
yeah,
was lining up with some
and
level right there, the 68 level,
and they'll work very,
68.64.
very well because it's retracements of moves, and computers love it. Like computers like simplicity, and so it gives you that nice little, the retrace on the move. And then oftentimes, this is completely off topic again, but whatever. We're just yapping tonight, having some fun. So oftentimes, if I do an extension, I'll sometimes do it like I'll try to do, because when you do your extensions, so this is obviously a retrace. When you do your extensions, you get 3 points. And I know that sounds weird because a fib, you're down highs to lows, lows to highs, whatever you're doing. So on an extension, you're looking for upside move. Well, a lot of the time I'll have my fib from the big move. Then I'll run my extension off the 50% retrace. So when we get our pullback, this is where I start trading these levels on the upside. This starts to give me a whole bunch of confirmation for the breakout if it's going to come. Then of course, you go from your 100 to your 161 and it's a pretty big distance. But I love to use previous big move, use the 50% retrace on that for what is the midpoint on your fib extension. But again, I don't think fibs are necessary. Fib, it's a Fibonacci. He was a pretty kooky guy that did a lot of stuff with math and a lot of stuff with repeating patterns in nature, markets, things like that. But we aren't getting into Fibonacci tonight. Okay, so with that, how do we analyze these long time frames? I've been yapping about it for 25 minutes now. So how do we actually do it? And let's see. So as I said, we always start on our daily time frames. That's where all of my levels, all of my trends, all of that stuff is going to come from. And so what I like to do when I show this type of stuff is I like to basically just, when I'm teaching how to do this, I like to basically have a cutoff of where I'm going to stop charting levels so that, so what I mean by that is I'm going to start charting levels, but anything that happened here is not going to be included. You're going to see that the previous levels oftentimes line up. But why I do that is because then when we chart all of our levels, we can go back and make sure they're working. So as I said, we're going to cut that little part off. And for me, support and resistance, people make it way too difficult. They try to, oh, your levels need to have 5 touches or whatever. I think that's dumb. You should put levels where dramatic reactions happened on the chart. That's all we care about. We're options traders. Chop, not our friend. We want to be in the market where it has made dramatic moves before. So how do we do that? We look for, major highs and lows. I'll call them all kinds of different things, but any sort of major high and low, any sort of exhaustion, any sort of big rejection or bounce points. So it's a piece of cake, this level right here. And like I said, I'm going to cruise through this and show you how I do it. And so to me, all of these are big. Your chart can get a little cluttered. Obviously, all of these, we took big gap downs off of there, took big gap down off of there. So lows as well. Anywhere we took a big bounce, we want those. Anywhere that the market sells dramatically and bounces, we want. Anywhere the market bounces to, sells dramatically, we want. Anywhere the market stops, we want that on our charts. Those are the levels that will matter time and time again. And like I said, even AT&T, is the greatest example ever. We traded a triple bottom on AT&T that had been in the works for 30 years, and it ended up marking the absolute bottom. And the last time those levels were traded were 15 years before. So they work over and over again. Good question. What do I consider a big bounce? When my eye looks at it and I say that was a decent move, I'm not going to say you can't start charting these, like, did the market sell a few bucks? Yes. But we want to say, okay, market hit here and then we went down. We aren't saying 565.39 is what sold us. In fact, there's no chance it was. Oh, this is a carry trade. There's no chance it was. We just want to know where that selling started. We don't care about cause. We don't care about any of that. Anywhere the market hits a wall and stops and sells, or it hits the wall on the bottom and bounces straight up, we want that on the chart. So anywhere we see those, we just want to mark them, just like that. So I'm going to do it again, and I'm going to do it on 3 different charts. I'm basically going to do it without talking, just to show you again and again. And then we're going to come back to this SPY chart. We're going to go to shorter time frames, because remember, all of our levels came from, none of the buy up. So we'll go through the buy up and see how well our levels worked. So next one we're going to do, just for fun, in May 2025, we'll get rid of that. That was last month. So again, going fast. We don't care, we want to say, where did the market bounce? I guess I should have done all these. Hold on. We're starting again. Yes. So we'll do it. No bounce yet, or no dump yet. And we'll just see how these levels perform on Apple real quick. Obviously, big old double top right there. Nice selling. Nice selling. That was even a triple top. Love to short that one. Looking for major levels. That's all we care about. Where did the market take some very dramatic reactions and bounce? That's all, you'll see sometimes the lines touch once and we've never been back to it. Sometimes the lines touched, 10 times and we haven't been back to it. Keep on going, right? Even these are the levels we want. Look at us. And we love when we get 2 levels close to each other, because then we got a zone and we know our entry and our stop. So there we go. Apple, done. Same thing. We're going to do another one. Amazon. Look, I got some fibs on there. So Amazon, we're going to do the exact same thing. Don't pretend the dump of a lifetime didn't happen yet. Mark these important bounce levels. Rejection level, already got it. But I already had that. So this is what all of my charts look like too, for reference. And you'll start to pick up things. I like to do tops and bottoms of consolidation, sometimes things like that. But so again, we're just going to cruise through this. So Amazon real quick. We see, and we had none of the levels yet, but we see markets going up, breaks this level. I really should have a couple on those tops, but breaks this level. We want to look for it to track down to 220. That's where our next major daily level is. We get our sell down to this 220, 218 area. We don't want to start looking short until we break it, and we look for bounces up to 220 to short. And as we can see, I'll just pull the chart up so we can see it good. All old levels. Perfect rejection points. Market is stopping where it needs to, bouncing where we would expect it to, bouncing up and closes where you would expect it to. When we break a level, we track to the next level. We find support where we have little clusters of levels. We look for more bounces up. Of course, not everything's going to be perfect. There's going to be more levels to add, but we can see all of these old levels providing trades. And that's what we want. Then we go to our short time frames. We don't have many levels on here, but when you break above a level, you look for the move to the next level. When you break below a level, you look for the move to the next level. Is it always going to be a $3 dump and happen instantly? No, but you can see when we get in here on these shorter time frames, after we've done our charting, we want to go to these and we want to cruise through them and just look and say, are these levels working like they should? And we know all of these levels are from pre-dump. Are we getting rejections where we want ourselves to get rejections? When we break levels, do we rip? Do we try to hold levels? When we break them, do we dump? Obviously, there's a lot of bouncing and dumping going on at this time. If we sell down to a level, do we bounce to the next level? Do we bounce the levels we want to do that? We just want it visually. You don't have to be super quick. You aren't always going to be right on the money. This is what I was discussing, intraday support and resistances. You aren't always going to be right on the money, but you can start to say, well, as we push towards levels, I'm not long into levels. I'm long when we break above levels, but I don't stay long because you're looking for a breakout that has a high probability of not coming. If we break and we retest, things like this, breaks and retests, we sell them. So again, this is what I do on every single thing. Like I said, we did it on SPY first. These are the levels. I mean, if we pull up my chart, it's going to have more levels than this because I got some scalping levels. But this is what my SPY chart is going to look like. This is what this is what all of my charts are going to look like because it's what I trade. It's what I trade every single day. And so when we go back through them, chart RTX, yes, and I'm happy. I'm gonna chart some things. That's my plan for the last 10 minutes of this class, is to do some charting for all of you. So once we've got all of our levels, I got my indicators on there. Maybe you like them, maybe you don't like them, no big deal. We just want to go through and say, are they working? Do these things have repeatable results? When we break above them, do we move? When we break below them, do we move? Do we consolidate between tight zones? This is what we want to see every single day. So when somebody DMs me and asks me for a chart, this is what they get from me. Maybe it's something I've traded. Maybe it's something I haven't traded. You guys saw once you get it down, you can chart them out super quick. It doesn't have to be a ton of effort. You're marking major highs and you're marking major lows. That's all we are looking for. And as I said, the reason we're looking for those, we want dramatic reactions. You don't want to level on a candle like this that's not moving you anywhere. You want to level on the bottom of a candle like this because you say, don't know why, but the buyers decided to show up heavy at 509.98 and rip us. We don't care how or why. We know that it was the carry trade unwind and the drama on being done there. But we just care that gave a big reaction. And so we want to watch that. So even when we got back to here, you can see this was a major low. When we broke it, we cratered. When obviously ignore the candle of a lifetime, retests of it, big bounces. I mean, not to the cent, but you're within a buck. That's all we care about is strong reactions on the chart. So with that, and then I guess I should, check it in. I always find my trends, things like this on the daily. This is one that I've been discussing lately, posting on my charts. So far, it's been a bit tricky for us, but we'll see. And I don't even know if this is exactly where I have mine drawn. And I see mine's even a little bit lower. But this is what I do on all of my charts, just to see, what's happening and have the big view of the market. So does everybody get that? Any questions there? It's simple. If you do this on all charts, you have all the levels you need. That's all you have to care about. Slap yourself a couple of trend lines on there to make sure you're trading in the direction the market is trading. Or if we're in some sort of range, always feel free to find that daily range and say, okay, I'm a dip buyer on Apple at 192.68 because I know my stops are tight. And if this thing decides to turn around and run, I have massive potential gain. Don't be the person longing up here 212, 213, hoping you get the breakout. Be the person longing down here, trimming, able to ride up. Then if you want to roll to a new position for the breakout, you can catch it. Okay, well, with no questions, this is Thinkorswim. Sorry, I see people already answered that, but Thinkorswim, Charles Schwab. Chart RTX. Yeah.
Something I've said before too, for everyone else in here. When you trade the daily levels, it helps you take less trades, which is preferably better. You don't want to be sitting there taking everything,
Yeah, and it just makes you wait,
Yep.
Yeah. Well, yeah, it's I'm assuming.
The hell is that? The hell is that thing?
RTX. It's funny because I was actually looking at it recently, and because we have, stuff going on in the Middle East. And so, somebody was asking about it, and, this is like think tank people, and uh, they wanted to be along for war. I hope they did, is all I can say. But I mean, at this point, look, that thing's trading 162. I mean, I don't know what you want from me. It's all the way up here.
Dude, oddly enough, I've been having a little bit of success trading. So what I've been doing is I've been going in pre-market, and I've been just trading. I have a watch list set up that tracks like the gainers, and I just been trading those small cap fucking.
Oh yeah, they can be so fun.
Dude,
I used to trade
I
this.
mean, I'm
I used to
I'm
trade this
applying
a
the
lot.
same concepts. I'm applying the same concepts that I've been learning, and I
Like,
like I've caught.
dude, I caught this on it.
Oh wow.
Yeah, it was my biggest penny hit ever, dude. Shaved to zero. Look at that, 8 thousandths of a penny, and then I cashed it at about 700 or 10 thousandths of a penny, and I
A
cashed it
lot,
at about
a lot
seven.
of the small cap names I've been
Yeah.
been hitting my watch list, my scanner, I should say. They're usually a couple bucks,
Yeah.
$3 stock. Like I've seen some that run from like $3 up to like $10 in like an hour or two. And if you're trading the shares, 'cause that's all you can trade on those names, anyways.
Yeah,
It can be
there's a penny stock moves 1,000%
the downside is
unfortunately I can't give. Sorry, unfortunately I can't give you any advice on RTX. I mean, it exploded. If you're in there, congratulations, but it's not something that like I would recommend going and chasing tomorrow, because it you don't know what's going to stick around. It's that they're like that think tank aerospace missile company. Like I guess they already just shaved $10. Don't go chasing it or anything. But like I said, you can see my chart on it. I just happened to have it because I recently pulled it up. Those dips down to 136 were obviously the entry. Oh, you were short? Yeah, I can't recommend being short war names when there's war stuff going on. I see what you were doing here, potentially trying to short these highs. Maybe I don't know if you had the same levels or anything like that. But this, I mean, I don't know what happened yesterday, but that is such a strong candle. This is not the type of candle you want to kind of come back and short, honestly. But you are, especially if it's a weekly. Well, I can't say you're for sure, Cook. This thing could very easily come right back down. I mean, that's 560 shares, 1,400 shares. That's all that were traded. I mean, that's no volume. TM, yeah, let's check it out because I know a lot of people are trading this one. I've actually even taken a couple trades myself on it. Let's see where. So same thing we do on absolutely everything. Doesn't matter what it is. We find our major highs. Anywhere we're taking big bounces, anywhere we're taking big rejections. Are you guys noticing a theme here? Treat them all the exact same. Don't care stock, don't care any about that. And then obviously you always want to take note of any sort of trends you got going on. I'd probably go from this higher low if it was me.
You can't use stop losses in aftermarket and pre-market though. I found that out the hard way last year.
Well, if you have to edit your order, it has to be EXT GTC, extended hours, good to close, or good till canceled. Sorry. So wow, TM, interesting little setup right here. No brainer answer is be short at this double top though. 72.14. You could have your stops over that, 73.40, whatever it is. So, a buck of risk. Nice little pullback, potential $4 pullback, something like that. Doesn't mean you're bearish on the thing, obviously, or on the stock. Bullish momentum, strong trend up, blah, blah, blah. You likely want to be in more of a dip buy mode on this, but when you are presented something on the chart, you take what the chart tells you. We know double tops, triple tops, things like that tend to work very well. So we want to look to be short those, obviously this level, super simple one. It's from, just a couple of weeks ago, the middle of May. You go to today, that was where you got short. I mean, and don't get me wrong, it looks like it's breaking out. Al Brooks has one of the greatest phrases ever. The market has a truly unbelievable way of printing candles that convince you that one thing is going to happen and doing the exact opposite. This is a perfect one. Big bounce up, nice consolidation, break above it, but any short-term trader only looking at the last few days, you're only looking at the last few days. You're looking for this breakout. You're saying, oh, we're going to run back to these highs. Any big time frame trader is like, ooh, I don't want to be long there. I don't want to be long there. But get that nice pullback on it. And I think this is a tradable thing, both long and short. If this news can dump us on back down here, that'd be a nice spot, 63. Not saying we're going to dump over 10% back down to there, but I guess 10% almost on the dot back down to there. But definitely worth having your eye on. Is SPY getting throttled right now?
That's what's nice about options, bro. It doesn't really matter what direction the market's moving. You can, as long as you take a solid setup, you can make money either way.
Yep. Oh, wow. Yeah, Israel did just do an airstrike on Iran. Wow, we had 1 hour ago, the news was Israeli attack on Iran could come within days, US and Israeli officials say, and then the next one is Israel conducts airstrike in Iran.
Looks like we'll be buying some dips in the here in this week.
Yeah, I would think so.
That's going to bring down a
is,
lot of stocks, dude. It's going
yeah.
to be red tomorrow for sure.
But then this is when you go to your which one was I on? Was I on this one? This is when you go to your daily time frames and we start to say, okay, where do I feel comfortable buying this dip? And I mean, based on our current
590.
Yeah, 590. Or if we hold that 595, I mean, big sell.
After that, I'd probably look at the 583 level.
And don't get me wrong, big sell here, but big sell to a price that we were trading at the beginning of the week. So, don't get don't get too
all the week's gains just got wiped.
Don't be the person saying the end is near, and it could be. I'm not gonna say it's not, but you don't want to be the person saying that when this whole thing's bought up green by open. You just want to start to say, because I'm assuming most people aren't trading futures, so you could obviously be trading this little push down, but start to look for dip buys. Market's still strong, unless really bad news happens. Really hope it doesn't. Super sad situation, no matter how you add it up. But still stay in that dip buy mode. Market needs a pullback. Maybe they give us 590 tomorrow and we get a hammer, a little 590 bounce. That'd be a beauty. 590 to 590.6 bounce would be a real nice one. Oh, do PEP? Well, we already did PEP, but yeah, let's go back to PEP. So PEP, super sweet one. Trade that I really like. I know a lot of people. Let's see. I know a lot of people.
And I made quite a base.
Yeah,
made a nice base.
A lot of people have been talking this one, and I think for good reason. For once, I think people's eyes are actually somewhere good. So obviously, we do the same thing we always do. We want to find our major highs and lows. We're trading back. What are these? These are 2020 prices. Look at that. 2020 lows. That's a time to be a buyer. So we aren't going to need much above there. There's a major one. There's a major one. So as you can see, back 2021 levels, holding us right about exactly where you would expect them to hold us. Then we got the beautiful range going on right here. No questions asked. That'd be about what I was looking for in my range. Any dip down to this 127 to 129 zone is worth buying. If we're able to get this breakout, I really should probably have these on here too, just because if we're able to get this breakout at the top of the range, 132 to 133 zone, then definitely you can look for some of that upside on some sort of break and retest, anything like that. But I'm not rushing into longs on a day like today, well, and of course, today ruins it, but on a day like today, I'm not the one long and above 131. Did you make money? Yeah, but I like to be long down on the dips and look for the moves up, not chasing at the highs or ranges. As we can see for the last 1 2 3 4 5 6 7 8 9 10 11 12 times. You could almost even count this one. The last 12 to 13 times people have tried to buy this, buy for the breakout on Pepsi. They have been extremely disappointed. Is time number 14 the time? Maybe. Nice, good volume. Strongest candle, well, since this one, but strongest candle we've had in there in quite a while. So maybe this is the one that breaks out. But real breakout for me is going to be above this, 132.75 to 133 zone personally. However, I like it. It's one that I like people being long there. It makes sense to me, especially if you're buying on these dips down here. Jacob, just because, I don't care who you are, where you're from, nobody likes people dying. People killing people always scares everything, but like, it is interesting to note that the market is down $6-7 and it could, of course, go more, down $6-7, because somebody shot missiles. But then, like, think about, like when Trump put tariffs on and we dumped $30, so oftentimes war isn't the huge reaction, but no matter what, 1K even asked about this a little at the beginning. No matter what, you're always going to get some sort of reaction of it. People don't like that type of scary stuff going on. Yeah, a lot of those moves will come in the like pre-markets and the after hours because we get that data, and so that's why I try to teach people, that's why I try to teach people that, you know, the market intraday spends a lot of its time in a range. So learn how to trade it. Will you sometimes get, nice pump into open and get a little bit of continuation? Yes, absolutely. Or even continuation downside? Yes. But the market can only do two things. It can trend and it can range. And so the natural progression of a trend, if you think about it, it's going up and then it doesn't necessarily like, go red, but it always works towards flat. So you might have had this trend, and then you might have had this trend, and then you might have had this trend, and your trend lines are always going to gradually flatten out more and more as the market goes from trending to ranging. So the market's always going to end up in a range. That's why I recommend so heavily learn to trade those ranges for sure. Looking at snow. What's it been? Is it dying like everything else? It's getting clobbered. Man, if this sticks, any put swingers are gonna be pretty happy. Okay, well, that's all I got. If there's any more questions, happy to talk about them. But if not, we can call it a night here. Right on. Thank all of you. I appreciate y'all for being
Hey,
here.
thanks, River. It's always a
Yeah.
pleasure being in your talks.
I appreciate it.
Appreciate it, brother.
Shout out everyone for always being here, and thank you so
I-
much.
I did have a question if you have a second, River.
Yes, sir. What do you got?
So the volume. So when
Uh-huh.
you're trading the range, my struggle is always, like this afternoon I was on you with SPY, right?
Uh-huh.
Trying to catch those puts as it, dipped,
Yeah.
went
Uh-huh.
up and down.
Yep.
How do you use volume combined with the ranges?
So it all depends on time of day. It also depends on what you're expecting from volume. I personally believe that I expect different things from volume. I have this fancy volume indicator. If anybody wants it, you're welcome to have it. I'll share anything I got with you guys for free. But so I got this fancy volume. Let's just get rid of it. Let's look at my more simple one. So I do a couple different volumes. This is obviously the more simple one, just green and red, no big deal. And then I have this one up here in the top left corner. So this is going to show me my daily volume. And this one is showing me the current 5-minute candle volume. So for volume down here, what I want to see is, there's no question. When we look at the volume right here, it is reducing, and then we start buying up. It is reducing, but it is staying substantially more buyers than sellers. I'm not overly concerned with what the actual number is. I'm more concerned that there's more green than there is red. That's what matters to me. And then up here, my daily volume, this I use mostly looking for switchovers, were buyers in control and now there's more seller volume, that might give me confidence to start looking short. We were trading today and I was trading these bounces. Other people were trading the shorts, both of them making money. Neither of us were right or wrong because it's a range, so you long the bottom and you short the top. That's what you do. Volume doesn't, I don't want to say it doesn't matter, But when you come into the end of the day like this, and again, we come down to our volume down here, it's big volume. No matter what, it's big volume. And I'm doing the same thing. Is there more green than red? That's what I care about. If I start to see volume trickle off and I start to see, more red than green, then I might, start to be worried about my calls, which I should have been. This is where I should have sold my calls instead on this candle, that's all I use it for. We cannot process fast enough what the volume is actually telling us. So I keep it super basic. Final thing that I look at, I said I run 2 of these. This one's the 5-minute volume. I just want to make sure that it is more in my favor than not in my favor. I don't per se care about the number specifically. I care that if I'm long, I care that there's more buying than selling. Something that I will do, and you likely heard me talking about, I'll use level 2 because it's orders that haven't been placed and it's orders that will have an effect on the market. And so remember, you might remember me when I was talking about this in there.
Yeah, there was some guy
Yes.
that had a huge order that kept
And I
moving it
kept
around.
saying, remember, somebody wants 603.70. Remember how many times I said that?
Yeah.
We ended the day at 603.72. Somebody
Oh.
wanted us there. Like,
Right.
somebody wanted the market there. Is it always going to go there? No. Well, remember, I was also saying, yeah, and there's somebody down there at 602.50 buying.
Mhm.
And
Yeah.
we hit 602.38. It's never going to be perfect, blah, 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 But when we were trading up here, through all this range stuff, I was saying there's a buyer down there at 602.50 and somebody wants it to 603.70. And is it always going to work like this? Absolutely not. But those big orders on the lower parts of the tape can kind of give you an idea of where somebody big wants it. And this was, whatever it was, 5,700 shares, something like that. So, is it an absolutely mind-blowingly large order? No, but it's, like
It's not 5 shares. Yeah.
5,700 times 600, whatever that is. I mean, millions. So, so that's all. So that's why I like level 2 end of day. And so I see another person. I feel like my volume bars are a lagging indicator. They are, and I'm happy you brought that up because you notice I'm talking about level 2 here. And I'm not talking about time and sales because level 2 is the order book. The order book is orders that are waiting to be filled. So they have not had their effect on the market. For there to be volume, a transaction occurred. When that transaction occurs, it pops up on time and sales. So time and sales is also, I won't say it's lagging, but it's had its effect on the market. We might see a big number on there, but it's already done what it's going to do. That much we know because it's a filled order. It's been reflected in volume, blah, blah, blah. These orders that are waiting to be filled, those are people either wanting to put on a trade or they're people that have a place where they want to sell their trade. So this is a non-lagging. This is leading indicator. Volume lagging. EMAs lagging, SMA lagging. Don't get me wrong, volume is live action, but there's 64 million transactions going through on SPY. Our eyes we can't, and our computers, all of that. We can't see volume instantly and analyze it. So for us, volume's technically lagging. It has had its effect on the market. That's why I'm into keeping it simple and saying, just to like be dumb, like more green than red. We're going up. Keep it simple like that. And like I said, I have this fancier volume indicator. I didn't name it this, somebody else did. And if anybody wants it, again, you can have at it. So I have this fancier one. It shows you a couple of additional things. Do I think they matter? Not necessarily. Like it gives you, current bar selling, 52% sellers over the last 9 candles, 60% sellers over the last 60 candles, 74% sellers. So you can have an idea of averages, things like that. This little blue dashed line is, average volume for the day. So there's some other little things you can see in there. Are they necessary? Not even remotely. But this
I feel like trying to look at all that extra shit would just be confusing. It just, like
Yeah,
you
you'll
said,
totally
keep it
miss the
simple.
And
entry.
it's again, because you guys know me. I mean, anybody that comes to my lectures, keep it simple. So
Yeah.
check. So this is how we'd use it. Okay. Well, let's just pretend we're short. Boom. We short the bounce. Okay. We want these to stay red. And this one, the current bar, it can bounce green, because there's going to be buying and selling on every candle. We want the average bars selling. The last 9 candles, that's telling us for the last 5 minutes, for the last 45 minutes, it's been 60% sellers. For the last 60 candles, it's been even more than that. So, 73% sellers, obviously, because so much selling has happened here, but this is telling us that in the last 4 hours or whatever it is, 5 hours, it's been 73% sellers. Obviously, it's really kicked up, but just use the color. I don't care if it's 74 or 81 or 99. Okay, I can't fully say that. There's times and stuff, but I don't care about the percent. I care that I'm short, it's red. Keep it that simple if you can. And don't get, the current bar ticked green, that doesn't mean sell your puts. If overall the selling volume is red, bearish, then it can be a little bit of, okay, I'm going to stick with this trade.
Excellent. Thanks so much. Appreciate that.
Oh yeah.
Yeah, thank you,
Of course.
sir.
Of course. Yep. Yeah, quick rundown. And then if you ever want to ask in voice chat, when there's actually market data going on, we can pull up the level 2s and I can stream my screen and I can show you more of what I was looking at. We can do it on the futures here, but someone's trying to buy 6 contracts and someone's trying to sell 4 contracts. We're not really gonna learn it. That's all there is, But if you ever remind me, I'm more than happy to stream my screen. And I'll just put it out there. I'm not some amazing tape reader. Like I will never claim to be. It's not something that interests me a ton, but I know the basics and I know what matters to me. And can you get deeper? My buddy Lambos, he loves tape reading. He does book maps. He does all of it. He loves market data. That's how he really likes trading that way. So if you get into it, awesome. You can run with it. There's people out there that they don't even trade candles. They trade footprints. There's all these other things to trade. So if you get into it, awesome. I'm not that into it. So I'm decent. I mean, I know what I'm looking at. That's it. That's how I've kept it for myself. It's just something that I've never really wanted to delve in on. Okay, well, that's going to do it, everybody. Thank you all so much. This was a great lecture, great questions. Always appreciate the participation from all of you. And like I said, I got some things going on, but I might be around tomorrow and I'll try to catch y'all then. Yep. Thanks, everybody. We'll talk to you soon. Thank you.
Bye.